All right, all right. Good morning, good morning. How's everybody doing this fine day? It is a fine day indeed. Looking out the window, awful bright out there. And we're ready to rock and roll with the markets. I got a good idea. I got a good idea. I think it's something fun that we can do today. A new little project for the summer until we come into the fall and we start working again at the university and teaching our classes down there and having the lab. I think if we have a little project to work on all together, it'll make coming to class a little bit more fun and exciting. So we're going to have a little project from now until fall, and we're going to do something fun here. Just a second. I'll show you what we're going to do. We're going to pull up a spreadsheet and we're going to track our trades. Okay, we're going to track our trades, and we're gonna first of all, before we get started with that, I don't want to jump right in right now. Make you wait for a second. All right, a little excitement here. A few more people show up to class. We got a nice little group here so far, so good. But let's see if we can get a few more people out of bed and come in and join us. I'm going to come in and take a look at the economic news, and I got a little story I want to tell you. Of course, I got a little story I want to tell you. I always got good little stories to tell you. All right, let's come in here, make sure everything's set up just the way we want it. So Thursday, that's today. Thursday, 6:30 a.m. We got Chicago Fed national activity. We got the initial jobless claims coming in at 6:30. They come in. Forecast is 225. The actual is 217, so a little bit lower than expected. S&P Global Composite PMI, Purchasing Managers Index, 52.9, 54.6. So that's good. They're buying things. We always like that. We like it when they're buying things. 52.7, 49.5 on the global manufacturing. Global manufacturing is down a little bit. S&P Global Services, Purchasing Managers Index, 52, 55. They're down a little. Oh, they're up a little bit. So that's good. And then we got new home sales. This spurs kind of my little thought that I have here. My little story, 69 to 62, they're down a little bit. All right, new home sales month over month, 10.6. What? Forecast at 10, actual is 0.6, down 11%. That doesn't make sense. I guess they were down 0.6. The previous was down 11, so they're actually up from where they were. The forecast was that they were going to be 10 and they were only at 0.6. That doesn't make sense. New home sales month over month. We're up from where they were last time by a long ways, by 10, and they were what? Expecting 10, so they were expecting a 20% increase in 1 month, but they only got a 10% increase in 1 month. That seems strange. All right. And then tomorrow, we got durable goods coming in. You ever get that little button on top of your hat and then your head sits right on top of it and jams it into your head? That hurts. I don't like it when that happens. All right, now let's come over here and we got to pull up our software and we got to get started. Let's get rocking and rolling. We got to about double the number of people. Okay, a few of you rolled out of bed and come and found us. That's good. All right, let's come in here and see if anybody wants to say hello. We got Jay out there. Jay, I can see Jay in my little window. Good morning, all. Welcome. Mark a correction here where he says, told you so, like a train on rails. There we go. We got Bruce coming in. It's nice to see you, Bruce. We got Kirk. It's good to see you this morning, Kirk. John's nice to see you, John. Albert's nice to see you. Chad, it's good to see you here this morning, Chad. Climbed out of bed. Everybody climbing out of bed just in time to come and see what the markets are doing. Let's go take a look. All right. Then I got a story I want to tell you. Uh-oh, what happened? I thought I already did that. How come it's starting over again? I think I got an update. All right. Got my lemon water. Okay. I got such a big portfolio. I got look at this thing. Look at this thing. If I drop down my portfolio window, oh, look at little Illumina. I bought some Illumina. All right, so look at this. I got all these portfolios. Look at them. Little Richie Rich Fund. I got our S&P, Q&Q, Real Max, UBIs. Why? I got too many things in here. I think it's time to start a new book and just pull out some of these portfolios and not have so much stuff in here. I got so much crap in here. things we've done, seasonal. See, look at that. Even seasonals clear back in May are still in here. I got to clean this out. So I'm going to do that. Not right now. Do it offline. Do it later. We'll have a start because I want to start a new little project here, and I want to start it with you today. I was let's go look. Just, first of all, let's just go look at the S&P 500 and see what it's doing. Well, it's still climbing up out of that third drive. So not yet. We haven't got our breakdown yet. We haven't got our breakdown yet, Jay. Like a train on rails. So we're still climbing up out of this third drive. This is the C drive. You can come in here, and that's good. You know, we like to see it following the plan. This is C1. This little piece right here, this is the C2. And the B was very disappointing. Of course, it's middle of the summertime, so timing on that is a little bit important too. The story I want to tell you, I have a good little story. Look at this. This is C2, C1, C2, and we're going. We generally get C3, right? The C's we sometimes don't get to C3. C2 will go up, then C3 is where it fails. So be mindful of that. But I'm really disappointed in the B here. B is usually the largest drive, and we got such a crappy little B but we had such a good A that it kind of makes up for the crappy B. It just is what it is, right? So we're up here breaking all-time new highs. Everybody's so excited, making money like they've never made money before. They just can't make this much money anywhere else. The enthusiasm's just climbing. That's when the market comes in and crushes everybody's feelings. All right, so be careful. All right, so what we got here now, this is a Fibonacci bow tie on the long-term basis. Let's draw that in here real quick before we get all excited about our little story. All right, A, B, and if we go all the way up to the top of where C should be, it's 200%, right? So I don't think we're going to get all the way up there. I think we had this massive fall off right there. Come out here, 200%. Not before we get a correction. We're not going to get a full Fibonacci bow tie. That would be a Fibonacci bow tie. That would be a massive Fibonacci bow tie. Look at that big old thing. That's what that thing would be, because we got this big jump here. You got this big drop here, and then you get the retracement right back to where it was, and then you get the projection up to here, and then you get the pullback and set that bow tie off back to here. I don't think we're going to get that. I don't think we haven't. You know what? We haven't got full bow ties on any of these things. Because technically speaking, let's blow this back up. Blow it back up. So technically speaking, when you get your ABC drives in here, okay, let's get rid of all the drawings. Delete all drawings. Oh, show all drawings. Delete all drawings. All right. So technically speaking, you're supposed to be able to come in here, right, and measure these little buggers like this. Can't see very well. Let's go like that. And then that's supposed to pull back with a little bow tie off of here. Oh, that's not good. A little bow tie off of here. Here we go. So bow tie up to here, back down and tie off there. See, so we got a little bow tie there. It just wasn't a very good one. It's just kind of a ski-wampus bow tie. Now this actually, the B drive was actually a little bit better bow tie, even though it was just a little small one. Okay, so here, back to the bow tie and tie it off like that. So that was kind of a clean little bow tie in there, but it was small. Now the next one, we're going to go off of here, right? So we're going to go off of here, this peak here, down to this valley, up to the here, and then a double up to here and back down to here. So that could be a little bit cleaner bow tie. We're getting a little bit larger rally on the top than on the bottom, which is good. That's what we like to see. We like to see it break above the previous high and actually rally up a little bit. Now, we didn't get as good a pullback here as we'd like. That's the thing that made this bow tie a little bit ski-wampus. So that's kind of what we're looking at right now. Looking for this little thing to come up like that. Now, why does a market do that? Why does it do this? Well, it's because it pulls back, people buy the dip, and the market starts to rally, right? So it's an accumulation stage. We accumulate on the dips, usually, all right? We try to accumulate on the dips. That's the idea, accumulate on the dips, buy the dips, right? And as the market rallies up, that's where we get in. Now, you can see down in here, the big boys, this tracks the big boys, they're all green, green, green down in here. They're collecting, it shows green back in there too, but this is all where they were doing their collecting, right? They're picking up all their shares. That's what high checking money flow tracks the big money. And then this thing comes, and then we start to buy out and they start to sell out. Okay, we start to buy in, they start to sell out. And then we buy the dips and it rallies, and we buy the dips and it rallies. And then we're loaded for bear up here. I mean, the retail traders, we have so many shares up in here at this point. We're so top heavy. We're like an upside down elephant, man. I mean, we talk about that all the time. This is where the big boys down here who collected here, they've been selling all their positions out all the way up that trend. So they're out. They don't have anything. And all the retail traders, we got so much stuff. We're so top heavy up in here. All that market has to do is just drop that far and we've lost everything because we dollar cost average all the way up and create an upside down pyramid. And that's what they want us to do because that's how they take our money. So this is how they're going to start taking our money. This is going to come up in here. And there's still a lot of exuberance going on right here. Everybody's really excited. And it can go higher. It can go up into a fourth drive. We can get this little pullback and it can go into a fourth drive. It's just rare. All right, so we're doing probabilities here. We don't make buy, sell signals. We come in and just tell you what the probabilities are, and then you have to decide if you want to participate in a low probability trade or you want to wait for a higher probability trade. That's all that we do here. We just look for the probabilities. Now, that said, we're following, just like Jay says, this is like a train on rails right now. It's almost like straight out of the manual. We got a perfect 3-drive pattern. We're going into the this is the C2. So we're at the very top of the tippy top of the drive, tippy top of an Elliott wave drive. That's what that is, right? It's Elliott wave. So tippy top of the Elliott wave drive. Come on, dry your tools, man. There you go. So that's where we're at. We're at a C2. We can generally get C3s. We can get a C3. So, but we oftentimes see the market fail on a C3, but we're on C2 right now. So we're good. And we're looking for this little bow tie. And then we got to have this kind of action happening. So that's where we're at. Are you willing to take a really low probability trade right now? You want to jump in right now? I don't want to jump in right now. I'm taking profits right now, taking money out of the market, just like the big boys down here. They bought down here, was selling out all the way up that uptrend. All right. So that's the name of the game. We want to do just the opposite of what retail traders generally do. But we have to kind of play that game. We can, since we're smart, right? We're smarter than the average bear. We can play that game. We can buy in and we can ride these big markets up. We don't have to buy in down here and sell out all the way up like the big money does. We can buy in and we can trade that and we can be profitable trading that up. Just remember that, by the time it gets up here, these big boys, they're out. They don't have any shares left. And so they're going to let the market fall like a rock. And generally it comes back to about half or 50% back into that delta cone of probability, right? Again, we're just talking probabilities. We're not talking, the market's going to do this or, the market's going to do that, because nobody knows. What we're going to do is just say the probabilities are that the market's going to go, once it gets up there to the top of that C drive, we don't know where it's going to be. But once it drops and breaks those blue lights, we're going to expect it to get a little ABC back down to at least 38.2, which would bring it back down somewhere around this previous high here. You know what they say, the bigger they are, the harder they fall. So the bigger the drive, the harder they fall. So that would bring us back down into this Fibonacci sweet spot, clear down into here. Now, that brings me to my story. All right. I was watching, every now and again, I get stuck watching YouTube. And YouTube, they know what we like. They know that I like the stock market. And so they show me stock market stuff all the time. So I get stuck watching some of these idiots on the stock market stuff. And I was watching these two kids. And they have this channel, and they have a lot of people watching them. So got to give them credit. They got a big audience. I'm choking on my water. But guess who they had as a guest? They had a guy from BlackRock. And these two kids were trying to be impressive. They wanted to impress the BlackRock guy. And you could tell because they're like throwing out all these numbers. And they'd obviously done their research about, the dollar percentage this, and the gold is that percentage. And this currency is doing this, and that currency is doing that. And the bonds are doing this math, and the math is doing that math, and this math and that math, and these statistics and those statistics. And it was so funny. because the every time that the guy from BlackRock, he was obviously very smart. All right, he was a money manager, been managing billions of dollars, and these two kids, obviously probably had bank accounts or probably, you know, stock accounts of about $30. And so they were interviewing this guy, and he kept saying things like, "Well, this is making, in longer term trend, we got to look at the trend, the higher highs and higher lows, and lower highs and lower lows." And he kept talking about the stuff that we talk about in this class, and I was just like busting up because I mean, these kids didn't know the first thing about what they were talking about when it came to what the BlackRock guy was talking about, and the BlackRock guy was talking completely about the structure of how markets move through price and time, like what we study here. Right now, he wasn't, of course, calling it, by all the traditional names. He was just saying, higher highs and higher lows, and we've got this, that, and this stuff happening, and this is how we got to look at the markets, and we'll look for these pullbacks to these different levels. And he was talking about technical analysis, just like we do here. And these two kids knew nothing about technical analysis. They didn't even know that a higher high and higher low was an uptrend, and lower high and lower low was a downtrend. We got to talk about unemployment rates. We got to talk about this, that, and the other thing. All these different fundamental reasons why the markets are going to go. And they, of course, they were they hated Trump. So they had TDS really bad. So the markets are all going to, according to them, is going to all flush and down the toilet and die. And tariffs are going to kill the country, and we're all going to die, and we're all going to, the oceans are going to be up over our heads in the next 12 months. And it was just like, it was hilarious because these guys are all fundamental technical, and this BlackRock guy's just sitting there going, well, if you look at it from a long-term basis, we're still in an uptrend because it's making higher highs and higher lows. Those guys, yeah, but what about the this math and that math percentage and that percentage and this percentage and this fundamental and that fundamental, and what about the price of rice in China? And it's just like, oh my gosh, it got so bad I had to turn it off. I was like, I can't watch these guys make fools of themselves. They're just like, obviously don't know what in the hell they're talking about. I mean, actually they did. They were very smart kids. I mean, they knew every statistic about every fundamental reason why the market should, they had their bias, and you could tell they had their bias, and they had built a model from every fundamental number that they possibly could that proved without a shadow of a doubt that this market is going to lose 50% of its value in the next 3 days. Now, I'm saying we got probability the market's going to pull back. We're up at a C2. The probabilities tell us that we've got a correction coming. Where is it going to happen? Well, we don't know. We're at a C2 right now. Traditionally speaking, when we get into this level, we've got a C3, and the C3s oftentimes fell, but it doesn't mean they have to. The C3 can go up and create a new C3. And I've seen C4s, C5s. I can go show you examples where markets just keep on going. It's really rare, but it happens. All right. So we just don't know what the markets are going to do. We just know that the probabilities are getting smaller and smaller and smaller and smaller the higher it goes, that we're going to get a correction. So do you want to be a buyer up here? Not really. I kind of want to wait, see if we can't catch a dip. But these guys were a total crash. I mean, AI is going to crash. All these firms, they don't have any money. Everything was like, it's like they went in and they found all the negative reasons. When you have fundamentals, you have two sides to every story. There's like, even ChatGPT, you ask ChatGPT, if we do a SWOT, we talked about SWOTs the other day. SWOT will come in and tell you the good things that's about the economy or about this different company or whatever. And then they'll tell you the bad things, and they'll have compare and contrast. And they'll say, this is what's good. This is what's bad. This is what you can look forward to. This is what's probably can happen. This is what the good things are happening. These are the bad things that are happening. No, these guys have gone through and picked every single bad thing that can possibly happen. And they never said a single good thing. And all the bad things were listed right out. And they were sitting there telling you all the bad things, why the market was going to collapse and we're all going to die. All right. And this poor BlackRock guy, he's just sitting there going, well, we're making higher highs and higher lows right now. He was just trying to, I don't know. I turned it off. So I don't know what happened at the end. Couldn't watch it anymore. You'd have thought that they were Ocasio-Cortez out there. telling us that the world's going to end in 12 years. That was like 3 or 4 years ago, right? 12 years have come and gone. I don't know. I don't know. I have no idea. If you ask me, Ocasio-Cortez could be right, but I watch the markets and just look at the probabilities. I'm all about the mathematical probabilities. That's all I do. I don't know anything about that stuff. All right. So believe what you want to believe, but realize that, past performance is not necessarily indicative of future results, but it's the best we got. So we just look at what markets have done in the past and then kind of make predictions for the future. And we use mathematical modeling and based on probabilities. That's all we do. All right. So there we go. That's my little funny story. Watch some guys talk to, but the point that I really want to pull out of this is that the BlackRock guy, he was all about the technicals and the mathematical modeling, and he was all about the higher highs and higher lows, and he was all about he was all about what quant systems do to trade. And the other two guys, they were all about the fundamentals, and they didn't know anything about that. So they were just like, and the guy was just kind of like, he would listen to him, and he was being a good sport. Yeah, that's important, and yeah, that's this, and yeah, oh yeah, he was going along with him, and he had his own numbers, and he could quote along with them. He's very smart. These two kids. It's just kind of funny. All right, that's enough of that. Let's go and do some work here. All right, first thing I want to do is I want to pull up I screwed up. I made a mistake. I'll show it to you just for fun. You guys want to see Land made a mistake? Here's my mistake. Not a big mistake, just a small mistake. But I'm working on my spreadsheet, and you guys all know I haven't had time to do much of an update on the spreadsheet. I ought to just give this spreadsheet away. I show it all the time. I don't know why I don't just give you this spreadsheet instead of the one that I give away. The one I give away is a good spreadsheet. It's not quite as far along. I don't have all the little charts and stuff in there on the one I give you when you subscribe to Pit News Magazine, but it's pretty close. It's almost the same spreadsheet. This is my real money spreadsheet. And here's the mistake I made. I have the traditional IRA over here, see, and I just barely got it all moved into this new spreadsheet. And I went in and I told you guys I was going to buy the Granite Shares TSYY, right? And I said I was going to put that in my portfolio. And I was going to put it into my, because I just wanted to test. I didn't want to get crazy with it, and put it into my main portfolio. I was just going to put it over into my IRA. And so I was going to put 10 grand in there and just watch it and see how it does for a little while. It's still not very solid to me. I mean, it still looks a little shaky. It's still brand new, and it's still on that downtrend. And we know that when these guys start these new funds, they flush like toilets. So I don't ever want to buy into one brand new, but it's still kind of new. And we'll go pull it up. Let's go look at it. Where is it? Where is it? It's TSYY. There it is. All right. So see, it's still in flush mode. Still dying. And look at and they switched it. They switched from this is the point I wanted to make. They switched it from making monthly. They were doing monthly dividends, and they switched it to. I can't use this little program. It kind of sucks. So then they switched it over to weekly dividends. And the weekly dividends, so it went from doing $1.38 to right now we're doing 25 cents. 24 cents, 25 cents, 30 cents, 29 cents, 30 cents, 30 cents. But in the process of doing that, it's still in its downtrend. It's still losing not as fast, but it's still losing the NAV, the net asset value of the fund keeps dropping. So the question is the dividends keeping up with the drawdown of the NAV? And we just needed to keep up. And these are put options. So, and you think, well, it's a put option, so they make money when the market goes down. Well, that's not what this is. This is the value of the stock itself. This is the cash reserve fund, which is going down in value as they bring in the dividends or take the dividends out of the profits, right? And they're taking the dividends out faster than what they're making it. They're pulling out more money than they're making. That's the problem. And they're doing that, I think, to get attention. I really believe that they're doing that to get attention. I think that YieldMax does that too. But the thing is, if you take your little calculator, this is actually a lot of money. So we're going to go over to our Pit News calculator, and you can see that out of all of these funds, TSYY comes out on top. All right, let's bring this bigger. Bring me down here. So TSYY comes out on top. Now remember, this is our little calculator over at Pit News Magazine. So you go to pitnews.com/dividend-calculator. That's the URL. Can you see it up there? That's right. Just type in that. Not all this stuff down here. You don't need all this. All right. You don't need all this stuff. Ignore all that. That's just the answers that are down here. That's where it's at. So you come in here, you just want pitnews.com/dividend-calculator. And the only way you find this is if you come here to this class and I tell it to you. There's no link to this. You can't go to Pit News Magazine, or you can't go to Pit News. You can't go find, you got to be to this class. And then I tell you that link. All right. Now there's several of them that we've created, but this is the most recent one. And I just updated it with Grok. So Grok just fixed it, updated it for us, put some new features into it. So if you don't come to this class, there's not a link to it. You can't find it anywhere. Not that I won't. I mean, well, why not? You put it out there somewhere, but it's part of the course. It's part of the class. It's part of the stuff that you get when you take my class and course. And you guys are here taking the class and course. So there you go. You get my little calculator. But nonetheless, as we come down here and look at this, it comes out very top. Now, the ones that are the granite, the granite, what's it called? Granite shares. I think it's granite shares. Yep, granite shares. Okay, so granite shares, and we're going into the ETFs, and it's the yield boost ones. All right. Now, I've got an idea of going in and having Grok help me create the leveraged inverse single stock. So I'd like to go and have these put into the calculator and see what they're doing with this stuff. Because this granite share is new to me. This company got brought to my attention because of these yield boosts, and they're all basically brand new. And they only have 5 of them here. NV for this is for NVIDIA, the Qs, Tesla, Bitcoin, and SPY. Now, if you remember yesterday, we did a little bit of work here, and we came in and we looked at, what was it, Chad? The 2 Bitcoins, YBit and BITO, right? Chad was asking about Bitcoin, and we did that little bit of comparison. We should actually, and we discovered that BITO would actually probably, the dividend on BITO and YBit were almost identical. I mean, within pennies of each other, or dollars, within dollars of each other. So I think YBit was just a few dollars more than BITO, but the NAV was better on BITO than it was on YBit. So we decided that we should have been in YBit over BITO, right? Isn't that what? No, we decided we should be in BITO over YBit. Now I've got YBit, so I need to do a roll over into BITO, but we've got XBTY, here in this one, Chad. So we need to compare XBITY here against BITO and see if XBITY wouldn't be better than BITO. And there are some other Bitcoin ETFs that pay dividends that we could also compare against. So we have to, maybe do a little bit of work before we start rolling into things and rolling out of things prematurely. So right now we could come into XBTY and we could go over to our little calculator. And we could say XBTY is right here. And look at that. Now, BITO is not in this list. I don't think we have BITO in here, which is we should have it in there, and we don't. But XBTY, Bitcoin, is above and is the only, it's below SN. You'll know NVIDIA, look, out of the top 1, 2, 3, 4, 5, 3 of them are these granite shares. Now, they do things just the opposite of what YieldMax does. YieldMax does the covered calls, and Granite shares, they do the cash secured puts. So basically the same, 2 sides of the same coin. Market still has to go up for them to make but the thing is, if the market is rising fast, and the YieldMax funds are going to do better because they are going to participate in the increase in rising prices, whereas a sold put does not. But right now, and they're getting, and I wonder, because the dividend, the NAV is dropping so fast, I wonder if the reason they got such big dividends returns is because they're giving you too much ROCC, right? ROC, most people are familiar with ROC, return on cash, or return on capital, right? You're getting your money, you're getting your profits, but return on cash and capital is something different that's unique to these funds. They start returning your cash and your capital. So not only are you getting the cash, the profits, you're also, sometimes they give you your own capital back. And people think that's a bad thing. I don't think that's a bad thing. I'm like, heck yeah, give me my own capital back. That's really cool. I want my own capital back because I give you my money, I get your shares, and then you're like, well, you know what? We're going to give you your own capital back. Okay, great. Do I get to keep my shares? Yep. Oh, well, great. I get to keep my shares. So they give me back my capital, but I still get to keep my shares. So eventually they're going to give me all my capital back, but I still have my shares. They're still going to give me the dividends. It's not going to say, well, oh, for you, Land, because we gave you all your capital back already. And even though you still have, 10,000 shares, doesn't mean they're going to stop giving me my dividends. They are. They've given me all my capital back. Now I don't have no capital risk because they gave it all back to me. And they're still going to be giving me my capital back, even though they already gave me all my capital back. Does that make sense? It's not a problem with me. Cheers. Give me all my capital back. Because once I get all my capital back, you're going to still giving me all my capital back, even though I got all my capital back. It's not like they're going to say, well, suddenly, Land, we know you. We gave you all your capital back, so we're not going to give you any dividends anymore. Doesn't work that way. Right? That's what's really cool about these things. Cash and capital, man, to me, it's a good thing, not a bad thing. A lot of people freak out. Oh no, we hate these guys. They're going to give you your capital back. Okay. I don't know why that's a bad thing. Seems pretty cool to me. All right, so let's go look at YBitty, XBTY. How are we going to do that? Let's see. We're going to do it over here. XBTY, dividend calculator. We're going to real quickly go XBTY. And I'm actually missing, I wanted to kind of trade the markets today. I got sidetracked here. So we're going to do the number of shares. Also, we got to come in here, share price. So we got to come over here. XBTY. So it's brand new. See this? It's really brand new. XBTY is at 478. 478. Share price. Oh, dividend. Wait, which one am I doing here? I'm getting lost. That's the dividend. What's the price? $25.35. 0.478. 25.35. Is that what I said? Monthly? Okay, now we're going to come do BITO. So 25.35, 478. 25.35, 478. Okay, let's do BITO. So BITO. Oh. Okay. BITO only pays out monthly. XBitty pays out weekly. So 0.777, they're 27.77. Lots of sevens here. So this is BITO. BITO. Share price was 47.77. Didn't I say 47? No, I forgot. 22.78. 22.78. And it was 0.777, right? That's once a month. This one here is weekly. So we got to put this in here at weekly. Let's see if, and I haven't tested this weekly against a monthly. Let's see how well Grok did. See if Grok did this right. Okay, so the annual dividend yield on XBTY is 98.05. It did. It broke it down for us. So weekly is 188. Weekly for BITO is 78. Monthly is 341. Monthly is 817, Chad. Look at this. Yearly is $4,000. Yearly is $9,000 on XBitty. Wow. 5 years on the accumulation without reinvestment is 50,000 here. It's 20,000 here. Wow. Okay, let's say that we do a reinvestment. You do the drip. It's 1.2 in 5 years. It's 1.2 million at this rate, and this one is 64,000. Holy smokes. X-Biddy. So we don't have any history on it. Wow, that's crazy though, right, Chad? That's crazy. That's crazy. Let's come over here and let's do this. We're going to do a comparison, and we're going to put in here BITO, B-I-T-O, and we're going to put in, what was this stock ticker symbol? It was XBTY. XBTY. Well, they're about the same right there on the nav, which is good, I guess, technically speaking, for the short amount of time that we've got. The nav is about the same, so you're not going to get it all in the dividend and lose it all in the nav, because the nav is about the same as BITO. In fact, it's just a little bit better. It looks like the BITO kind of caught up to it there. Wow. 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 What do you guys think of that? That's pretty wow, don't you think? That's crazy. So anyway, I made my mistake. All right. Show you what my mistake was. I wanted to go put some in TSYY, which is at the top of the list, right? So if we come back over here, the top of the list, we go back into the investment calculator. We go into $10,000, which is what I put in, or close to it. TSYY is right at the top. In fact, TSYY is better than what XBIT, right? It's a little bit higher than XBIT by a lot, actually. So anyway, I bought some TSYY. And that's the point. And I screwed up. I made a mistake because I meant to put it into my traditional IRA right here. And I didn't. I accidentally bought it in my individual account. So I end up with TSYY. So I've added TSYY right here into my individual account. That's the mistake I made. But so I have $10,000, $10,155 in TSYY. So we're going to start tracking that, seeing how it does. All right. So we'll see how that does. And there's my column. I just put it in right there so you can see I've got nothing. It's all zeros right now. Everything's zeros because I've got no dividend. Now, I think I got it in time for the dividend distribution, which is Friday, which is tomorrow, but I don't get my payment, it says, until next Tuesday. So the first time it should come out. Now this is estimated by 4. So it should be about $250. So I'm expecting that to be my first payment to be $250. We probably only have, how many Fridays do we have left in this month? Just one. So I'll only get one payment for this month. It'll be $250 right here. And then in August, it should be closer to $1,000 on my $10,000. Should get $1,000 in August. And I'll get 4 payments. And that means it's going to be able to compound it 4 times if I want to. I want to be smart about it. I don't want to drip it. I want to strategically put it back into the market. It may be that it's, strategically putting it back in the market would be putting it right back into TSYY again. I don't know. But that's what I've got going here. So my little charts don't have any. I added it right there, and I added it right there, and I got $10,000 in there. You can see it's that little tiny sliver. So it's just a little teeny piece of my account. So those of you guys who use Excel, you have to have a chart helper. To have these charts, you have to have a chart helper. So I created a chart helper, and I added it to my chart helper right here. All right. And so there's my little TSYY, that little yellow sliver. And of course, that's it right there, showing up right there. And it's got 0 because I got nothing yet. All right. So that's what I did. That's my mistake. I put it into this account instead of my other one, but I put 10 grand in so we can track it. We'll see what it does. All right. Okay. So let's get out of there. Now let's come over and pull up track and trade. Oh, we can't pull up track and trade yet. We got to go over to we got to go to bubbles, right? We got to go to bubbles. And this is what I want to start doing with a new project. I want to start a new project. We're going to go to home. Oh, look, lots of green in there today. That's good. We like green. Oh, Tesla's not. Tesla's red. Tesla's red. Tesla's down 8%. You piece of I'm so disappointed in Tesla. I don't know what's going on with Tesla. I think it all has to do with the fact that Elon got political. Look at this. Everything's almost all the good stuff's great. Look at IBM though. IBM's been really rocking it, and it's negative 8%, same as Tesla. Of course, United Health has been flushing like a toilet for some reason. Eli Lilly. It's not Leli Lilly Land, it's Eli Lilly. Yeah, well then why do they have LLL? To me, it's Leli Lilly. Leli Lilly. All right, let's come in. We're going to go to our bubbles, bubble world. And I'm going to come in here instead of market capitalization, I'm going to change it over to volume. And that should make the little dots tell us. And this is the S&P 500. Tesla's down. Chipotle is down. Uh-oh, somebody ate some beans. Dow is down. IBM is down. Semiconductors are down. Love is down. Nothing's really up big, are they? Google's up. Oh, Google. What's this one here? West Pharmaceutical. Man, that thing popped like crazy. It was trading at what? 220, 230, and it went all the way to 278 for some reason. That's crazy. Must have got a contract. Uber's climbing back up with that one. Look at that. Look at the pattern on Uber. We should probably go look at Uber. All right. Except for Uber, you know, the problem with Uber is that you got all these guys. Let's go new portfolio. Another new portfolio. Ugh. All right. This is going to be today's portfolio. Another portfolio. All right. We're going to go look at Uber. Ooh, Uber. What the heck? How are you going to read that market? Well, we got drive 1 off the bottom, drive 2, and then it failed. Didn't do a drive 3. Came down with the ABC off this one, ABC, and we reset. So you go and you look at the reset from here to here, and it came back way below into the one standard deviation. And then it took off out of there again with the rest of the market. Okay, so that's what that looks like. And that's Uber. So let's delete all that stuff. We got 200 period moving average way down here, 50%. This is just the Dawn chain channels, just putting my Fibonacci ruler in there. But this is our first drive up out of this new retracement. Why'd you get a retracement here to land, start a new drive? Well, because you got the ABC off the top. It got more than a 50% retracement. It came back into when it comes back all the way down like that, into the delta cone of probability down in here, and it breaks, and it gets that pattern. That's a reset, even though it didn't get the third drive. So this is a complete reset. We're going to start over, all right? So we're going to get a new Darvis box right here. So that was actually one shitty Darvis box right there. Now we're going to start a new Darvis box, okay? And we don't know where it's going to end. We don't know until it fulfills its mantra. All right, so that's our next Darvis box. So inside this Darvis box, we got our first big long drive, which is, you know, what all the other markets did too. And then we got the pullback. We got this little sideways thing, which was all the other markets did that too, except for the S&P. The S&P didn't do that. Well, it got that. That was the B drive on the S&P. Kind of a shitty sideways thing, right? We have the rally. Let's come in here and label this. This is a X1. And then this came in here. This is really ugly. I almost want to combine like two little spiky dikey doos right there on this crappy little B drive, which, you know, is kind of the same thing. I don't know. I want to call this B1 right in here. And it's the kind of where the stock market went sideways. We got this little reaccumulation. We got this little thing that just the month of June, you know, kind of crappy in here. I'm going to call this B1 right here. You guys okay with that? Calling that B1 right there. This is X1 right here. This is B1. I'm going to call this X2 right here. Let's come in here like this. Sometimes, you know, you have to kind of just make the adjustments that hindsight tells you. So we're going to come in. We're going to call this right in there, X2, not X1 land, X2. So that means this is our next drive right here. So this is the B drive, and that means this right here. This is, actually, I'm not going to call that X2. I'm going to call this, sorry, I'm going to delete that one. Delete notes, delete. I'm going to call this X, get out of there. Come on. I'm going to call this X2 here. Are you guys okay with that? This is B1, X2. I'm not going to call these little spiky dikey do breaks a whole new drive. We're going to combine that. It looks like it needs to be combined to me, doesn't it, to you? And this one too. Let it come down. It's all kind of one little drive in there. All right. So that's the way it looks like to me. So we're going to call that X2 right there, not down here. And then that means we're coming into C1. C1. So we're getting up here, but we got some upside potential. All right. Now we're going to put in our little, what do you call it? The spider web. So natural trend line, first green candle to make a new high right there. So then we're going to come in with the mathematical trend line, breaking of the blue lights. We don't know where it's going to be, but it'll be somewhere right in there. And then we got the horizontal. All right. So the horizontal. So that is buying into this market right here in anticipation of a C drive coming up, and they get us a C1, C2, C3, and then we'll get the full retracement back A, B, C, maybe back into this region here. So if that's the case, we can project maybe that's where the something like that for our Darvis box, right? We don't know, but we're going to kind of follow that. We anticipate that we're going to get a C drive out of this. And it's starting the C drive right here. Now, it could fail. Nothing's ever sure. We don't ever know what the market's going to do. But this is the probabilities tell us we're getting the first green candle. So that's an early entry. You can wait for it to cross the blue lights if you want to, in case we get a little jig and a jog in here, because we probably will. We'll probably get something that does something like that. It's not going to be, probably not going to be perfect. It might be. This one was. It shot right straight up. This one got a little pullback and shot right straight up, right? So we might get a little perfect little green run in there before we get a C2, but probably not. It'll probably come up, break the blue lights, give us a little jig and a jog in there, and then take off again. So that's what we're looking for. All right, so we could come in here and we could add some in. So that's the new little project I'm going to start. I want to come in here and I want to start a new spreadsheet, and we're going to start our new trades for the. So we're going to come in and we're going to call this the Uber trade. Uber. And we're going to come in and let's just shrink this down here for a little bit. All right. And we're going to put this over here. We have to decide how much we want to put in. Now, my idea is that we go in, we put $1,000, and we're going to do this every time. We're going to do these off these bubble trades, right? So in the mornings, when we do our morning sessions, we're going to come in and we're going to look at Little Miss Bubbles, and we're going to find out if there's not some things that are bubbling up, and we're going to put some shares on them. So we're not going to do options on them. Well, I don't want to say we're not going to do options. I never know what I'm going to do in the future. But we're going to come in here and we're going to put some shares on them. So the whole idea is that we're going to find on our little bubble thing, and we're going to track how well we can do trading bubbles. All right. Now, I will tell you that when I do this in the past, I've had some really good winners, and I mostly have a lot of losers. All right. So I have better luck if I have just kind of stick to the 100% club, or I have my Richie Rich club, which I like too. But this is fun, and it's for smaller accounts, all right, because these are going to be smaller trades. Those other accounts can oftentimes be too big for a lot of people. They can't trade them. But we're gonna track this. We're gonna see if we can't get some of these little bubble stocks to trade. We're gonna be smart about it. Well, obviously, we're gonna be smart about it. We're not gonna do stupid things. So we're gonna come in here and we're gonna find how much. My goal is to put $1,000 on each one of these little bubble trades. If we find one that's giving us a good little trade like this, we're gonna come in here. And usually when I do these in the Russell 2000. This is actually the S&P. So we'll see what happens here. Now remember, the S&P is it's going into its really top C2 right now too. So things are still going up. But remember, we're getting up to the top where it might be starting to get to the point where it's going to be like kind of trying to walk up a down escalator. Especially, we don't want to be the big problem is that if you start buying into like Uber, for example, it has a good buy signal, but yet the S&P is going down. It's unlikely that Uber's going to have a big rally. And it's not that it can't, because you see it sometimes happen where it's like, we're in a downtrend in the S&P, but you got one stock or two stocks over here that are doing weird stuff and going straight up. So that stuff happens. But usually if the S&P is down, the whole rest of the market, even though it has buy signals, they really struggle to rally. It's just kind of the way it is. The S&P is kind of your little happy-go-lucky guy. Everything likes to go along with the S&P. If the S&P is down, it's kind of hard to take a long position. And remember, we're getting up there into our high probabilities that we're going to get a retracement on the S&P. So we've got to be mindful of that. That's all I'm saying. Just be mindful. Be mindful. So we're going to come in here, and we're going to come down to, we're going to go into the charts, and we're going to go down to, not the portfolio, trade. And we're going to go down to 1 minute. I gotta go to charts land. We're going to go down to a 1 hour chart. Okay, 60 minutes. So here's our rally right there. So there's our downtrend. This is our bottom right here. So we're going to take our dollar calculator. We're going to say, let's say we're going to put in $1,000. So the question is, if we're going to put in $1,000, what's our risk? So how much are we going to risk? Let's come in here. We're going to put in $1,000. So $1,000, how many shares? There, 11 shares. Let's just make it an even 10. 10 shares. So we're going to buy 10 shares. All right. All right. I'm in demo account. I don't want to do this in my real money account right now. So we're going to buy 10 shares. And we're going to come in and we're going to take a risk of what? So we're going to do like a little 10% risk or 20% risk, right? So we're going to come in here to preferences, to our dollar calculator, and we're going to go down until we're going to risk. We're going to risk $100. Okay. So $100. Oh, wait, let's see. We put 1,000. I'm doing this backwards. If we risk $100, we can do 25 shares. So I bought 10. I need to do 15 more. Well, and the thing is, that wouldn't be $1,000. I want to do $1,000 into each one. I want to do $1,000 in each one. But that's not really apples to apples, is it? Because $1,000 on a $93 stock versus $1,000 on a, another. Let's say that we're gonna risk $100 on each one. How's that? That's a better idea. Small accounts can handle that. So we're gonna come in here, $100 risk. Well, yeah, it's the way we got to do it. So we're gonna come in here, we're gonna do $100 risk. So that means we're gonna have 25 shares. So I got to come back over to our trading tab, and we're going to come in here, and we got to have 15 more shares. So we come up to 15, and that's $1,395. So we're going to have to buy. Okay, so we pick up 15. Okay, so now we're going to put our stop in, and we're going to say, well, if the market comes down, and we got 25 shares, if the market comes down and breaks this low, it's probably not going to continue higher, right? So we just want to get out. And we're going to lose $100. So we're going to risk $100 on this trade. So that's it. So we're in with 25 shares. We're going to risk $100. If it comes down and breaks this low, the market didn't take off and go for us anyway. All right. So that's what we're going to do. All right. So that means we have to come over here. And we're going to go to chart. And we're going to just write this down. And we're going to start tracking these things. And we're going to see how well we do. All right. So we got Uber. And in Uber, we bought 25 shares. So it was shares. All right. And that's the name. I'll make this all pretty for us. Shares. And we're going to do cost each. And we're going to do how much do we pay for them? Oh, it doesn't say. It's 2,322 divided by 25. I don't know. We'll do the math on it. All right. So total cost. We invested $2,322.91. That was our cost. Cost basis has changed. $2,325.70. All right, $2,325.70. So we can back into this, right? Easy. We just come in here and we go like this, and we say total cost was this divided by this. There we go. Now we paid $93.28 each. All right. So that's our total cost. And how do we make it? Oh, you know what? We can do it like this. Do you guys know how to do this? And I'm just show you, give you a little. So we're going to come in here. We're going to say, we're going to come in here like this. We got to do number of shares. We got to also have the current share price, right? So it'll track. Oh, what did I just do? Like this. And then we're going to have the price, current price, current price, right? So we got to have the current price. That'll go there. So this can be Uber. And we're going to come in here to data. Watch this. And we can say this is a stock. And it's going to turn that into a stock, and it's going to actually go out and find the stock data. Uber Technologies, is this it? Uber. It's all of these are the same. Uber stock 6 Sweet Wiener Boars, New York Stock Exchange. We're going to select New York Stock Exchange. All right. So that's it. We're going to go select. And now that we got that, it should come in. And now we got this little thing here. Get rid of this. This stupid thing is like always it gets in the way. So now we can come in here and we can slide down here and we can say we want the price. Boom, just like that. Now, every time we open up Excel, it'll go out and find the exact price for Uber. Now we got the current price of Uber. We know we paid 25 shares. Our cost was this and our total cost was this. And we can now come in here and we can go current value. Current, I'll fix this later. So we're going to come in here and we say, well, how many do we have? So we go equals 25 times current value, $93. Oh, $2,325. Now we can come in here and say P&L, just like this. And we can come in here and we go equals. And now we say that we paid total cost was this. So we go this minus this, enter this. We've lost 70 cents. All right. That's it. That's very cool, right? Cool. Cost each. Let's make these dollars. We'll come back over here to home and we'll say that's a dollar amount. And there we go. So now we'll just do this little thing here. We'll go, and then we'll go like that and double click this. And now they're all the same size and they're all good. We can make these bold and we can make colors. We can do all kinds of fun stuff. Make a nice little spreadsheet. Looks like Claire's spreadsheet with all of her colors. All right. So there we go. So that's our first trade. All right, we got to put dates in here. I'll come back and do this later. I don't do it. I'll just put dates and stuff, this stuff we got in. But now we're going to track our portfolio things that we do. So that when we close this out in track and trade, it's going to go away, right? And we won't have any record of it. We won't know. And then of course you're going to have, you can go back and look at your statements and all that kind of stuff for your real money account. And but you don't have, I don't even know if the new clearing firm gives you statements for the demo account. They used to. I don't know if they still do. So we're going to keep record. We're going to keep our own record. All right. And this is going to be for bubbles. Bubbles. All right. So this is going to be our bubble portfolio. And this is our new little project we're going to track. All right. We're going to see how well we do until the end of the year. We'll just track this little portfolio, the little bubble thing, and we'll see how we do. See if we get stopped out, see if we make money. We're going to risk $100, right? So now let's go do another one. See how much fun this is. All right. So now we're going to come in and I'm going to go to the Russell. Oh, look at, we got I don't want to do that one. Look, it's $3.47. It's already on a tear. We want to buy the dips. Oh, wow. Bloom Energy. Wow. Plug. Look at plug. What's this down here? It's causing us grief. Ooh, that thing. CNH. Let's get rid of it. CNH. We just take it out of the list so that it, CYH, not N. CYH. Just get rid of these really outliers so the chart bubbles goes back to normal. All right. So how are we doing here? Let's come in and look at some of these fun ones. That one's a little bit of a tear. Okay. Ooh, this one took off and then pulled back. That's Kohl's. You guys ever go to Kohl's? That's a solid power, really ripping there. With some of these pullbacks. Ooh, that's not good. Oh, Wolfie. Look how it's kind of gone through this little narrow sideways channel and starting to rally. Plug's got big move. Ooh, BECCIO. Wow. Look at that thing. Oklo. Why does it keep jumping back and forth? We got one of the F. Is it F? Is it F? Do we want to go see this one? Not really. Let's take that one out too. I think that's the one that's causing it to jump around. FFAI. All right. See ya, FFAI. Okay. BE. Bloom Energy. Really took off. Plug. Plug's the one that, let's go look at plug. It's kind of already at the top of a multi-drive pattern, but let's go see it anyway. Plug. PLUG. Oh, we've already got some plug. We bought a call option on it, and we're up $1,000. Oh. What do we do? Buy the B1? That's it. Look at this. Drive 1, counter trend. Drive 2, counter trend. Drive 3. Man, those counter trends, those 3 drive patterns don't work. I never see 3 drive patterns. Me neither. They don't work. Never see them. Never see it happen. All right, so this is our A1 right here. This was actually an X3S, right? X3S A1. Just like a train on rails. Right, Jay? All right, we're going to come in here. This is a B1. All right, so that's a B1 right there. B1, the blue light break. Now, you could do your little spider web, right? And so first green candle to make a new high, spider web break, and then you got your horizontal, which comes across there just like that. So that's your spider web. So these are all different locations you can get into the market. If you get in here, you're getting in early, and you know that. All right. It's a different probability. Getting in a little early, you might get your tiny bitten, but you also have less of a risk because you're going to get in and get right back out right here. So if you get in here, you actually have less of a risk, even though you're taking a risk. You're taking a bigger risk with less of a loss potential because you get in here and you get out right there. So it's a bigger risk that it might not go, but you're taking a smaller risk. Now here, you're going to get in on the cross of the blue light, and you got a less of a risk that you're going to be wrong. But if it is wrong, you got a bigger loss because you're going to get out at the bottom of the trend, right? So it's all risk versus reward ratio. And then this is a breaking above the previous high. So if you get in on a break above the previous high, well, you get out at the breaking of the blue light, which, you know, who knows where that's going to be, way down here somewhere. But anyway, that's the risk versus reward ratios. That's why I like to get in down here. First green candle to make a new high. Might have to play around a little bit. You might get 2 or 3 little candles in here, but you want to kind of get one that's on the rally. First green candle, make a new high, and then your risk is smaller, but you get a bigger run. And I like to start taking profits, you know, on a break above the previous high, because you're going to get your Fibonacci bow tie, which starts here, boom, down to this, up to here, right? Back down to here, and over to here, ties it back off. So that's kind of what you look for. And we use that little Fibonacci tool to do that, right? So we can get our actual numbers, not just this little purple draw thing here. I just do that so you can see it better. So we're going to use our little Fibonacci tool. Maybe we ought to make our little Fibonacci tool purple. That's a good idea. It's yellow, so I like it. That's a good idea. Well, let's make it purple. Fibonacci bow ties are purple now. Where's purple? Magenta. Oh, yeah, baby, look at that. Oh, that's pretty. All right. So there's your Fibonacci bow tie. All right. Now this is, if we're going to do that, let's turn this line off here. 3-4. Is it the 3-4 line? Yeah, let's turn that one off. Save as my defaults. Update all. You guys want to have the settings? Here's the setting. Get your cameras out. Here, I'll get out of the way. I'll get out of the way for a second here. And I'll lower this all the way down to the very bottom. All right. Take your pictures, and that's how you want to set up your little Fibonacci bow tie, Fibonacci projection tool. That's that little tool right there. That's the little 1, 2, 3 tool. That's how I use that thing. You need the settings. So take your little cameras out. Take pictures of it, and then you can set yours up like mine. You got it? I'm giving you time here. Quick, grab your cameras. All right, that's the setting for the Fibonacci bow tie tool, the Fibonacci tool. All right, now I turned off that horizontal. You can use that for another pattern, but Fibonacci bow tie. That's how we measure those things. You can see it went up to 198. It's at 198 right now. 200 is kind of our goal. So that's kind of peaking out. Looks like we want to take some profits right now off that thing. Now, technically speaking, let's come over here. Let's blow it up. What is this? What are we looking at here? This is the B1. We got kind of a little, that's almost the same. That's the breaking of the blue light. But we got a little pennant formation right here. Now we got another little pennant formation right here. And we got another little pennant formation right here. It's trying to go up again. We're still a long ways away from the blue light. We got a natural trend line going here. As long as it stays above the natural trend line, you should stay in. We tighten that trend line up, knock off just the little red bottoms, the little poopy, spiky tails. Cat whiskers, as Claire calls them. All right. The question is, do we want to take profits with our option? That's the question I'm looking at right now. Because we're up $1,000. And that thing is coming into that's the B drive. Huh. So that's B1, that's B2 right there. B drives are usually the biggest drives. So the A drive, the B drive, B1 is right. There's B1, B2. B2's doing well here. We could go into a B3 and then even into a C. I think we're going to, how long do we have time on this thing? How much time? 176 days. I think we're keeping it. You guys want to keep that one? I think we'll keep that one. It's not part of our, I don't know if we should add this to bubbles or not. It's not really fair. We started bubbles today, and this is already something we were doing with options the other day. So I don't really think we should add this into bubbles. So we're just going to let this one go. I think we're going to keep it a little bit. I think we're going to keep it a little longer. It's got 176 days. We're only in the B drive. We're in a B1. I think that we're in the B2 drive. It's technically, we got higher highs and higher lows. We got lower highs and higher. We've got higher lows all the way up. And then we got lower highs. It's almost like one of those, because we use the Heikin-Ashi bars, it ends up being one of those B2.5s. I started doing these B2.5s because you get lower highs, but you don't get lower lows. You just get higher highs, higher lows, but lower highs, and it just keeps going like that. So like I've been calling those B2.5s like that. It's because you didn't break the low. So that's where that's sitting right now. I think we hang on to it. All right. All right. So we don't get to add that to our bubbles list because it's already making money with options over on our options strategy. All right. What else can we go put something on? Plug. That's the one we just looked at. Wolfie. Do we want to go look at Oklo is breaking above a previous high. We should at least go look at it, right? We should at least go look at it before we go look at Wolfie. OKLO. OKLO. Oh, wow. Breaking above a previous high right there. Wow. There's our ABC down. So take our little purple tool, ABC down. That starts the new drive. So that's the X2S, A1. That means this ends up here being B1 right here. And because it broke right there, doggone it, that ends up being C1. All right. So the B kind of had this little ugly failure right here at the same time as all the rest of the market had that really down little thing. And then we got this little Oakley thing happening here, going breaking previous high. So you got to take your little, what is it? Where's our spider web, and we go across the natural trend line, the red bars. There's your mathematical trend line. There's your horizontal. Well, the question is, you want to buy on a break above the horizontal. How high do you think that thing's going to go? So the name of the game is looking for that Fibonacci bow tie again, right? So we're going to come in here, the bow tie. If we go off the low, we up to the middle point, and then up another to 200, which would then bring us back on the bow tie. That trend looks like about kind of just take it right up through the middle of the trend. That would be our projection. So that would be our bow tie, right? Just like this. Bump, 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 and then tie it off back there. So that's what we would expect this thing to do. Now, obviously, we know it could be a wimpy bow tie. It could come back and do a little wimpy bow tie like that. But it's got this big punch in here, and it broke the previous high. It's got a hold above that previous high. Question is, you want to take that. You want to try and anticipate that we're going to have a good full Fibonacci bow tie, go way up there. Let's come in here and go down to a 1 hour chart. Didn't we not go to the 1 hour chart, Mr. Track and Trade? Okay. Now, technically speaking, there's our break above the previous high. Let's go down to a shorter term time frame. Let's go down to a 2-minute chart. Because generally what happens is, we know that this happens, right? These markets take off like a rocket ship. So there's our 5 o'clock, call to arms. That's what I call that. That pops really hard at 5 o'clock. That means they're going to probably run it for the morning session. All right, so that's your little giveaway right there. 5 o'clock a.m., you get your morning bell. And then if that pops like that, that's usually your call. I call it the call to arms, because they're going to run this thing during the morning session. The thing is are we going to see this thing continue to excel out over the next months, right? Weeks to months. Oftentimes what happens is you get these little call to arms, and the market makes these big runs. Everybody comes and jumps on board, and they start trading these things for day trades. And then people want to hold these things for the long haul, right? They're like, oh, well, this market looks good. I think I'll keep it for a long time. But then it flushes all the way back down after all the day traders are done, and it flushes clear back down here. So we obviously don't want to buy it right now. It's already way up through drive. We're going into the top of the B drive on the morning session. So this is drive 1. This is your counter trend. We're going into drive 2. We might get a C drive up here, but we know around noontime what's going to happen. It's going to flush all the way back down, right? That's what it has. That's what it does. So we don't want to just kind of jump in right now. I mean, you could, because you're like, well, it doesn't really matter. I'm going to hold on to this thing for the next, till I die. No, you're not. You're going to hold on to it until it makes you some money, and you're going to take your profits. All right. So what I think we should do, and unfortunately, because we're in class, I should just buy it right now so you can see that we're in, Oklo. But I want to wait till afternoon. I want to wait until, right close to the close of the market today, until this thing's had a chance to digest this big morning day trade move. Wait for this thing to pull back, and we'll probably be able to buy it way down here. Right? We'll be able to buy it clear down here somewhere. You got enough arrows laying? Not yet. Never enough arrows. So that's what we're going to do. I'm going to actually trade Oklo for us. I'm going to wait till the end of the day. All right. And I'm going to put it onto our spreadsheet. And I'm going to come in here, and we just, how do we get this? We just drag all this down. We highlight like that, grab the little handle, pull it down, boom, just like that. Now we come in here and we type over this OKLO. And that adjusts this and gives us the new price. And now we're going to have to, this stuff is all, right? This stuff has all the formulas in it, but it's got the wrong numbers. So I'm going to leave this in here with all the wrong numbers until we get our right numbers, because we don't know what they're going to be, right? And I don't want to screw up all the formulas. We got all the formulas worked out in here. How this works with all these math formulas, we just drug the math formulas down. Of course, Excel goes and automatically adjusts them for the new column. So everything's in there. It's just the wrong numbers. These are the right numbers. These are just all wrong. So all we have to do is just, so that's why I'll come in here. This is a formula. So I'll make that a color that's like don't change this because, it's a formula. So it's derived from something else. So you don't change that one. You only change the ones that are a certain color. I'll make them prettier. I'll make them like Claire colors, like smooth tones. All right, that's another formula. So we don't change that. Nothing in there gets changed. What about this one? Oh yeah, that's a formula, so it doesn't get changed. Actually, I got it backwards. I should change. Okay, yeah, let's do that. We're going to come in, and the ones that we do change, we make the color. Let's make it a softer yellow. Oh, pretty yellow. We don't have a soft, pretty yellow. Where's our soft? Let's make it pretty blue. Okay, so anything that's in blue, we got to change. That price, that one, we got to change. This one we don't. This one we do. And these are all formulas, so we just leave them out like that. So anything that's in blue, we have to change. So we have to get our share cost and our total cost, how much we paid for it. Everything else will be mathematically calculated for us. All right, we'll make it nice and pretty. We'll put a little header in here. We'll make the little header. What color do you want the header? Let's make the header orange. Oh, it's so pretty. All right, so there we go. So we're going to put that in there. And I'm going to go and we'll do Oakley. All right, we'll add that in, but I'm going to add it in after the market flushes out, which it may not do, but usually does. Okay. So let's go see what else we got. We were going to go look at Wolfie. All right. Wolf speed. Yeah, we should probably do more work on this than just technical. We should probably go in, spend a little time looking at the fundamentals. Wolf. Oh, I can't spell. WOLF. All right, wolf speed. Ooh, look at that. Do you think that's going to be? Look, every single one of these little patterns like that. Well, there was one, 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 there's one, there's one, there's one. Every time it got one of these little patterns, the market failed and flushed anyway. So what we generally do is we wait until we start getting the actual reversal. We wait until we get a higher high and a higher low. And I guess, you could, it didn't break the new low on here. It's going green. So technically speaking, I guess that's a reversal of the formation, right? It goes up and then it made lower. And then it let go. Then it goes up and it broke lower. So it's in the downtrend, lower highs, lower, just like the BlackRock guy said, right? This one here is higher lows. So it's breaking higher, and this is the low. So technically speaking, that's a low. We're in an uptrend. This is the reversal. The little ABC 1, 2, 3, 4 bottom. Oh, look at this thing. What is this? Count those down, Chad. Count them down. How many is that? How many drives down did that thing make? Drive 1, drive 2. It's all kind of one big drive right there to me. Drive 2, drive 3, drive 4, drive 5. 5 drives down before it get this little ABC pattern in here. Do you trust it? No, who knows? But it's a very low risk because we're going to put in our spider web, right? From this peak here, natural trend line, first green candle break a new high, mathematical trend line, come in somewhere in here, and then the horizontal trend line right in there. So these are your 3 different locations that you can get into the market. This is location 1, location 2, location 3. And of course, the higher it is, then you get your little bow tie and do like that. And if you're getting in on the break of the previous high, your bow tie is just it's not gonna really pay off unless you get a nice rally on the bow tie. And then if you wait for it to come all the way back down, you're just gonna lose all your money at the entry. So that's why I like to get down in here. I know the probabilities are a little bit lower that the market's gonna actually keep going, but you got a smaller risk. And if it does, you got a bigger reward. So your risk versus reward is much larger, but your odds that it pays off are lower. Does that make sense? Kind of makes sense, doesn't it? Let's come down here to a 2-minute chart. Whew, it's already dipped on us. So where's the 5 o'clock bell? Right there. Oh, got a big call to arms right there. Look at that. Nasty. Big call to arms. 7:30 came in and right there. So it did rally a little bit on the 7:30 bell, but now look, it's flushing and dying on us. What do you want to do? What do you want to do? Do you want to even play with this thing? We've already lost it. Wolfie, Wolfie. We could watch it through the day. If you want to sit here and spend your time watching this market, wait for it to break above that next blue light. See if you want to take a little position on it, see if it's going to rally. I don't think it will. I think it's the day traders have given up on this market. So let's go back to bubbles again. We're not really finding a whole lot here. Oklo, Wolfie. See, the big circles are the ones you want because that's lots of volume, lots of people. Look at this. Wolf, woof, woof versus wolf, wolf versus wolf. Look at Riot. Riot's just chunking higher. Chunk, 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 chunk. What's this? Cipher mining. You guys remember when we were kids, they used to show us movies? Remember the movie they used to show us, Cipher in the Snow? And the kid got off the bus and fell flat on his face in the snow and died. Can you believe they used to show us shows like that? Cipher in the Snow. Right there. Here I was, sixth grade, and they're showing me a movie. The kid gets out of the bus and falls flat on his face and dies. And they blame all the other kids because they weren't nice to him. It's like, don't be a cipher in the snow. Don't be the kid who makes the cipher die. That's pretty treacherous, pretty traumatic TV show, a little movie they show us as kids. Remember that, Cipher in the Snow? Did any of you guys ever watch Cipher in the Snow? We had to watch it for some reason. They show it to us every year. I'm not seeing anything in here that I'm really excited about. Are you guys seeing anything in any of these? This is all the financials right here. I'm thinking Riot. We should at least go look at Riot. Riot platforms. Let's go look at Riot. Where's my software? Oh, right there. Riot. Oh, wow. What the heck? Riot blockchain. Wow. Look at this. We got 3 drives down. We got 3 times the charm. Charm 1, charm 2, charm 3, and then it didn't break up. It broke down out of charm 3. And of course, that's when the rest of the market broke down. So there's drive 1, drive 2, drive 3. You never see drive 1, drive 2, drive 3 in these markets, do you? Never. Never happens. Okay, so then we got X3SA1, X3SA slash, that's our A1 right there. And that becomes B1 right there. And then that becomes C1 right there. So we're, I'm going to call this, it's not a, wow. I'm going to call this right here. It broke both the high and the low. So this is C2 right here. And then that little red bar, that's a C3. So these are just the tiny little pullbacks right in here. Gives you an opportunity to put an extra shekel on there or two. So here's another one right there. So that's C3. So we're really up here at the top of the probability state. So now that's when you draw your Fibonacci ruler in there. And you got 2 Fibonacci rulers you can draw on this one. You got up to here. Of course, we don't know if that's the top. We're just going to draw it there because that's where the top is right now. So if it failed right there, we would expect it to come back down into the Fibonacci sweet spot here. But that would be the first, because it's at the top of the 3rd drive, that'd be your first ABC. And then it'd probably get a little rally coming back up, and it wouldn't break the high. And then it would fail and flush and come back down to our Fibonacci ruler from the low down here to the high up here. And then that's where your next 31.8 is, right in there. So send back, land, send back. So then we get this here, come to there like that. So there's your first break on the 38.2 off of this one. Then you're going to get a little ABC, and then back down to this 38.2 here, and possibly all the way down into the 50, 61.8 back into here. We'll say 50. And this could come a little bit lower too. It could come down into here like this, but we'll just say 38.2 for now. We don't know. We're just looking at probabilities. Land likes the probabilities. So that's what we're looking. Wow, I don't want to be a buyer up there. That's at the top of a C3. Well, why don't you put on a put option then? Well, I doubt there's any down here you could have. Oh, there are. Holy smokes. Let's do 57 days. And, well, there's no volume on them. They're dead. Nobody wants to agree with us. You know what we could do? We know what we could do. I'll bet you we could come up here at 22 days. We're anticipating this market's going to fluff out up in here. It doesn't mean it can't shoot pretty high up in there, but let's see how. Oh, look, there's nothing there. Oh, wait, we got to do calls, not puts. Oh, yeah, there we go. Look at that. Well, they're selling things. These babies, they're selling these out. Look at that. That's 222 calls. 7,000 on the open interest. Look at this. Oh, there's the other side of it. There you go. There's the buy side. You found them, boys and girls. Like there's the matchup. 222, 122. Receive $49. Return on risk 12%. That's a 12% risk on your money, and they're going to bet that the market's going to be below that red line. It's going to hit that purple line underneath that red line. That's the game they're playing. You're like, I want to go higher land. Well, the higher is right here. But you're not making nearly as much money. Look at the spread. It's only $2 though. Of course, $2 is still, well, spread's only 0.5%. All right, that means we have to go up higher. There is no higher. Oh, wow. That's a long ways up. How much you making? 7% return on your money in 22 days. That's not bad money. That's pretty long. That's way out of there. I mean, that mark would have to continue on that trend. Zip like that. That's almost like guaranteed money. There's nothing guaranteed in these markets, land. Don't ever say that again. You're going to get yourself in trouble saying that. I'm not regulated anymore. I gave up my regulation. I can say what I want. It's the First Amendment rights. Still want to be good though. You know, nothing. Yeah, it's pretty good odds there though. Look at that. The odds are 98% chance you're going to get paid your money. Oh, that's implied volatility. Probably being out of the money. 76% chance you're going to get your money though. That's pretty good odds. 76%. You can't get that in Vegas. You're lucky if you can get 48% in Vegas. That's 76% chance you're going to make your money. How many do you want to do? Well, these guys did 1,121 of them, but they only have 122 up here. So I actually think that we've got a little strange thing going here. These guys are not buying. They're definitely selling. They might be selling. I can't believe they'd be selling naked calls, though. There's a lot of volume on that one right there. They're definitely not selling it. But where's the opposing? Where's the protection? See, there's no protection. They didn't buy 1,000 to protect it. That's what's weird. And if there's no protection on the other side, that means they had to buy it. Why would anybody buy that? You got a 23% chance of making money. You can go down to Vegas and get better odds. Who wants 23% chance of making money? I want 76% chance, which means we need to sell it, not buy it. But that means we need an opposing buy side. And they're all right there. I would rather not have it be that close, but this is too far away. This would make us a lot more money. We can go in here. Look, these guys in here. There's only 10, 280. See, we want this to be 1,000 and we want that to be 100. So to be there, we need to be up in here, but that's no fun. Nobody wants to be there. 7.5% return on your money in 22 days. Who wants that? All right, let's come in here and do 10 of them. See how much we can make. That'd be $150. I don't know. You want $150 on a $2,000 margin? Let's do 100 of them. That's $1,500. You've got a 76% chance the market's going to hit that purple line underneath the red line. That's what you're playing. That's a $20,000 margin, though, for $1,500. The odds on that are so good, though. Oh my gosh. I don't know if we can get it. Let's see if we can get it. Let's see. We would have to probably go to, if we go to 15, we probably have to go to, look at the spread, it's $400. Yeah, we're going to have to go down to 12. Look, the spread's $700. It's a $700 spread. You're going to receive $1,200, though. Return on risk is 6%. Margin requirement is $20,000 with 100 shares. It's almost like a why bother? $20,000 on a $700 spread to make $1,200. But do you care? I mean, yeah, you have to pay $700 on your spread, but do you care? There's 100 times. Yeah, do you care? You're going to make $1,200, and you don't have to pay it on the other side because you're not. You're just going to let it go all the way to. I don't know. Let's do it just for fun. We're in a demo account. Let's put it on there. I don't know if I'd do this with real money. I might do this. It doesn't look bad. 6% return on your money in 22 days is a lot of money. That's $1,200, $20,000, but it only has to sit there for 22 days. And the chances of that market going up and exploding up above that red line, you'd lose the whole thing. You'd lose 20 grand if it did. Closed up there. Well, not quite, because you got your call option that's going to protect you. That's why it's there. Well, margin requirement would be 20,000. Max loss would be 20 grand. They're going to buying power decrease 18. They're going to margin you at your max loss, which means that if the market hits the green line, you're going to lose 20 grand. What's the chances of that happening, though? 84% chance that it's not going to, 15% chance it's going to hit that green line. You got a 15% chance. Place the order. Did it fill? It's not going to fill. There's not enough volume. For 100 of them? It should. There it goes. We got it. Oh my goodness sakes. That's going to be a fun trade. You could do the other side, make it an iron butterfly. This is just a vertical spread right now. We call that a chicken wing, right? It's one leg of a iron butterfly. But the thing is we are anticipating that this market falls. So whether it's here or here or here or here or here, we expect the market to flush, right? And even if we take the A drive, let's take the full AB drive combined from here all the way to here to here. We're sitting right at the 130.9 right now off of the entire drive. 130.9 is the golden ratio to the upside. So that means we would anticipate the odds of that thing turning right there are really high. We could have probably brought that down. Oh, well. You could put another one on. That's fun. That's a fun one right there, guys. That's a really fun one. Look at that thing. I don't know if we should put that in. We're not doing options, though. That's the thing, is this little thing we're doing here with the bubbles, we're not doing options. We're just doing shares. So I can't really count that one. It doesn't go in here. I don't know. It's too bad. That's going to be fun. We're going to watch that one. All right. That's all there is to it. Okay, guys, I kind of pretty much ran out of time. I guess I better let you go. We could do this all day. We could sit here and look at stuff and do little spreadsheets. And I mean, it's what I do anyway, whether I have you guys hang along and watch me do it. You're doing the same thing on your side. We're all just doing, looking at charts and trying to figure out something we can put on, make a little bit of money, put the odds in our favor. That's kind of what we're doing, right? Walking around, looking at the different tents along the fairway of the carnival. Look at all the carnival, stick our noses in all these carnival tents. I guess that's it. Well, there's not really anything else to look at over here in bubbles. We kind of looked at everything we wanted to look at. All right, guys, I guess that's going to be it. We're going to call it the day. We're going to go back over here and look at some. We got to show you what we got going on. What software you been using, Lan? Let me tell you about it.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, and then Claire wants me to show you this. Hold on 1 second. 1 second. Don't run off. Don't run off.
Hey, Claire here. Guess what? Mr. Turner handed me the mic. I've now got my very own podcast, Pitt News on Air, your new weekly hit from Pitt News Magazine. Join me every Wednesday for stories, interviews, and a little behind-the-scenes scoop. We're live on Spotify, and yep, now on Apple Podcasts, too. Visit pittnews.com to follow. Come hang out with me and the gang. We're all there. Jake and Lena, of course, Lan Turner, David Duty, Dr. Scott Brown, Jordan Black, and even Aiden shows up on occasion. We're having a world of fun. Don't miss out. Pitt News on Air. Because news should never be boring. It's where your trading friends are. Follow us wherever you get your podcasts.
All right. And Claire needs to update that because she also has her podcast out on YouTube, on our YouTube channel at Trade Mentors. All right. So you can go watch them there too. So wherever you watch these videos, you can also get Claire's podcast. You don't have to just go to the podcast places. So you can get it on all in one place, all on YouTube. All right, guys. And of course,
look, if you haven't subscribed to Pitt News Magazine yet, then I'm going to need to see you professionally because you must have something wrong with your brain.
Okay. Get Pitt News Magazine, and that's where you're going to get the spreadsheets that we create here. And I'm working on this new little spreadsheet for us. And of course, once I get it nice and pretty and get all the colors and, make it, I'll clarify it. Clarify it. That's a funny word. I will make it nice and pretty, and then I'll start giving you this too. You can have this little spreadsheet. It's so simple, though. You can just make your own. But it'll be fun. We'll have a little bubbles portfolio that we'll manage and we'll control. And I'm going to I'll put on Oakley for us. I said I would. So I'll watch towards the close of the day, and I'll add Oakley in there, Oklo, and we'll put that in there, and we'll start tracking these. All right, guys, that's all I got for you today. We'll let you go. Have a good weekend. It's the 24th of July here in Utah, so today is a holiday. And watch the fireworks tonight. And we will see you guys next Tuesday morning, 8 a.m., bright and early. See you then. Don't be square. Be there.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.